Right. Just to echo Jen's comments, thanks everyone for being here. I know it probably wasn't the easiest day of travel for most people, so really appreciate you making the effort and coming to the event. So I'm going to start off with just a few words about what the halving really represents, and then we're going to jump into a little fireside chat here with Talal. So what is the significance of Bitcoin's halving events? Halvings are really a reflection of Bitcoin's hard-coded monetary supply and issuance schedule. So Bitcoin's monetary policy can be broken down into three core rules. One, there's a predetermined fixed supply of 21 million Bitcoin. Number two, new Bitcoin are released to the market every 10 minutes on average, every time a new block of transactions is mined. And three, this process occurs on a predetermined schedule. So beginning with the first block ever mined, which issued 50 new Bitcoin, and that number halving every 210,000 blocks, or roughly 4 years, until the final Satoshi is mined. So this predetermined release schedule is achieved through something called the block subsidy. And that's really the amount of Bitcoin awarded to a miner who successfully mines the next block. And this consistency of a new block being mined every 10 minutes on average is achieved through something called the difficulty adjustment. And that ensures that the amount of computing power that must be deployed to mine a new block equates to new blocks occurring roughly every 10 minutes. So how do we know that there will only ever be 21 million Bitcoin? 21 million was hard-coded into the Bitcoin Core software by Satoshi. And by design, it's impossible to change without consensus among a supermajority of Bitcoin network participants. The 21 million cap is enforced by consensus, meaning that all participants in the network agree to follow and enforce Bitcoin's protocol rules. If a supermajority of Bitcoin participants decided they wanted to change the 21 million cap, they in theory could. But Bitcoin is rigid and resistant to change by design. So any significant changes require widespread agreement and coordination among miners, developers, node operators, holders, users, and other shareholders. So making arbitrary alterations like changing the supply limit becomes exceedingly difficult to achieve. And beyond sort of these practical challenges of changing the 21 million fixed supply, there are economic disincentives to do so. So the fixed supply is a critical component of Bitcoin's value prop as a digital asset. It creates scarcity, which is a key feature of sound money that appeals to network participants. And it's ultimately, rational economic actors would they wouldn't willfully dilute themselves of their Bitcoin by increasing the supply. And so Bitcoin's rigidity and resistance to change is a really critical component of its value prop. And so if it's shown that Bitcoin could be easily manipulated or changed, it becomes no different than any other centrally controlled money supply, and would likely lose much of its value. So as we sit here today, we're a little over 2 days from Bitcoin's fourth halving event, where the block subsidy will decrease from 6.25 Bitcoin to 3.125 Bitcoin. And Bitcoin halvings are more than just a mechanical reality of the protocol, ensuring increasing scarcity over time. Halvings are really a reminder of the programmatic, transparent, predictable, and immutable nature of Bitcoin's monetary policy. These characteristics are entirely novel in the realm of monetary assets. Bitcoin's the first asset in human history where we can know precisely the ultimate finite supply and predict with certainty the issuance of new supply every 10 minutes. These qualities are core to Bitcoin's value prop and ultimately provide the foundation for the asset's full potential valuation. Bitcoin's price is a function of supply and demand, ultimately. We know the supply, and we can observe fundamentals of the network strengthening in terms of hash rate, user adoption, transaction volume, unique wallet creation. And all of these reflect an ever-increasing demand for non-sovereign, decentralized global money. So as long as demand for a digitally native, energy-backed, cryptographically secured, open source, fairly distributed, scarce commodity continues to increase, and confronts a static ultimate supply, the price will go up and continue to eat away at all other store of value assets that exist today. All forms of fiat money suffer from the fallibility of human decision making. The issuance and governance of said money is inevitably manipulated by those who control it to debase the currency at the expense of individuals. Even gold, which has a monetary policy which is enforced by nature, is subject to the ingenuity of humans and our ability to unearth more and more gold over time. Gold is not finite, but Bitcoin is, and Bitcoin is different than all other monetary assets in human history, and really halving events serve as an important reminder of the unique properties of this asset. So with that, I'll open it up to you, Talal. Thanks for joining me. So first question, just thinking about the impact of Bitcoin halvings on Bitcoin price and really, the 4-year cycles that we've observed historically, how much do you attribute to the mechanical reality of a supply shock versus the more psychological element of observing that programmatic nature of a monetary supply playing out in real time?
So theoretically speaking, the halving becomes more priced in every time because it doesn't surprise the market as much as it used to the previous run. So like when Bitcoin's halving went from 50 Bitcoin per block to 25 Bitcoin per block, it's certainly way more impactful than what's going to happen now. I do think that people don't necessarily learn from the previous cycle. So we will still see miners go bust. We will still see forced selling from mining companies that have high electricity costs. Like at the moment, the average for Bitcoin miners to break even is about $26,000. So that's the average for miners. That will double once the halving happens, because you're getting half the revenue that you used to, assuming Bitcoin still trades at the same price. Obviously, I'm very biased, so not the best person to give a very objective view on Bitcoin's price. I think everyone in this room also isn't necessarily the best person to ask, because we're all biased and financially incentivized to believe that Bitcoin's price is going to go up. So I wanted to give that sobering remark a little bit. But I actually think the biggest driver for Bitcoin price this run will be on the demand side. The supply side isn't going to matter that much because we're already at between 18 and 19 million Bitcoin. Most Bitcoin is already out. So the marginal increase of supply isn't that big. But Bitcoin ETF in the US, Bitcoin ETF in Hong Kong, people having concerns about the sovereignty of the US dollar and is it actually your money or not? I don't know if you've seen some videos in Canada and other countries where if you go and try to withdraw money from a bank, you actually have to write down why you're withdrawing the money, even though it's your money. So I think KYC AML probably took it to a more dystopian type system, and I think people are slowly realizing that we do need better money, and Bitcoin, in my opinion, is that.
Yeah, no, all really good thoughts. I think you're right to bring up that, mechanically speaking, each subsequent halving has less of an impact just because there's a smaller sort of absolute magnitude of that decrease in new supply. I do think, though, any thoughts around this halving compared to past halvings perhaps being more significant, at least in my mind, I've always thought of this as, because this is the halving where Bitcoin actually becomes more scarce than gold on an annual production or an annual issuance basis. It crosses that chasm of becoming more scarce than gold. And I think that could just be a narrative piece where it actually, it implants itself in people's mind a little bit more significantly, in the sense that, it's a really stark reminder of this thing is ultimately approaching a finite number, and it's now actually the most scarce asset on Earth.
Yeah.
So any thoughts around what if that could be a potential change?
So gold's monetary policy is one that I think has proven itself over time. Like if you think of the biggest ever increase in gold supply in a year, I think it was around 2.5%. So the inflation of gold isn't necessarily the biggest thing for Bitcoin to overcome. But my argument is that, do you know any asset in the world that is digital and scarce Like, I don't care too much about gold's inflation because gold serves the older generation. Someone that's 20 years old doesn't give a shit about gold being 1%, 2%, 3%. They care about something being digital and scarce. So as long as Bitcoin is the leading digital and scarce asset, I'm going to be betting on it because like, if you think of why gold lost its status as the global reserve currency, it's because it wasn't easy to use, it wasn't easy to send abroad. So what governments ended up doing is they papered the gold. They said, all right, let me keep the gold and I'll issue a paper that represents that gold, and that paper is easy to move around. So I think the digital and scarce element is something that's more important than the inflation. But even though it could matter to investors that are moving from gold to Bitcoin.
Right. It's a nice analog to say, okay, I've heard that this is digital gold, but now it's actually more scarce than gold on an annual production basis. You sort of alluded to this earlier around the impacts of ETFs this time around. You speak a little bit more about what impact sort of institutional involvement and the existence of ETFs could have on this sort of this forthcoming Bitcoin epoch, and does the broader awareness of Bitcoin's issuance mechanics mean that, to your earlier point, the halving could be more priced in to some extent, or is the more important point that there could just be a larger sum of demand coming into the market that is meeting that now shrinking supply?
Yeah, so actually on the ETF side, the reason why I think the ETF is such a big deal is many people forget that most money in the world isn't managed by the people that own the money. Like for us, we have, I don't know, a Bitcoin, $500,000, whatever amount of money you own, you're most likely managing it. But for companies and sovereign wealth funds that manage billions of dollars, the owners of the money aren't the ones managing it. And the way that traditional finance work is these asset managers are only allowed to buy what's called securitized assets. Assets that have an ISIN number, an International Security Identification Number. So for example, let's say I give my money to some asset manager. They're not allowed to go and buy an apartment in Burj Khalifa. They can go buy something that has an international security number. And before the Bitcoin ETF, there wasn't a legitimate Bitcoin offering that's linked with an ISIN that is publicly listed. So passive flows into Bitcoin is going to be one of the most important changes during this cycle, because independent asset managers are able to buy Bitcoin for their clients without necessarily getting their approval. Because, for example, who was it? Fidelity. Fidelity is one of the biggest asset managers and companies globally, and now they manage lots of money for all sorts of investors, and they will be directing some of the assets that they manage into Bitcoin. And that, in my opinion, is the end of the 60-40 type portfolio, where you put 60% in equities, 40% in bonds. That portfolio is dead for the newer generation, and Bitcoin's certainly going to take part of that.
Yeah, makes total sense. I think the other component of ETFs I think that is significant is it shortens that sort of chasm for people to dip their toe into Bitcoin and really start learning about it at a more fundamental level. Because to your point, they couldn't previously do that in an easy way, and now there is an easy way for them to do it, and then they'll start learning more about it and get more deeply.
So on that point, one of my friends has an interactive brokers account, and I told him, hey, log in and buy IBIT, the BlackRock ETF, and it gave him a disclaimer saying, hey, you can't buy this. This is a complex, exotic product. You have to apply in order to buy it. So it's clear that the TradFi or more traditional players, they're into crypto, but 1 foot in, 1 foot out.
Right.
And I think that will change. That will have to change over time, and we will see new adopters. I think the example of like newspapers and social media companies is a good one, because in the old days when social media first started, if you went to the New York Times or Gulf News, they would have told you, oh, Facebook, forget it. Like, we don't care about posting there. Now, all of them host accounts on those social media platforms. So I think slowly but surely we'll see banks adopt crypto and allow their customers to interact with crypto, or they will be part of history.
Right. So let's talk a little bit about Bitcoin's potential valuation. And so I mentioned earlier, it really ultimately boils down to supply and demand, and the halving, serves as that reminder of the finite supply of Bitcoin. And historically, those events spark a new influx of demand for the asset. So how do you think about Bitcoin's total addressable market going forward and its potential valuation, not just this halving cycle, but 2-3 halvings from now? How much of sort of global store of value assets do you foresee Bitcoin eating over the next, call it 10 to 20 years?
All right, so this answer is, or this question kind of forces me to drink the Bitcoin Kool-Aid, and I'm trying my best to stay a bit level-headed about it, because like we could say, like Balaji was saying, Bitcoin's going to trade at 1 million within 60 days. We can make these outrageous claims, but the reality is we're all very biased towards crypto adoption. There's still skepticism from traditional market players, and for me that's a good thing, because it allows us additional time to prepare and improve our product and improve our offerings so that we're able to capture a bigger part of that phase. But I would say at a minimum, and Bitcoin should equal the market cap of gold, and that would mean $600,000 per BTC. We've seen digital eclipse physical in pretty much every angle in life, so it's also logical to expect the same for Bitcoin. But I think people mess up the timelines quite a bit, because there's no real way of, I guess, accurately predicting this. And like this past weekend, it was clear that gold is still viewed as a safe haven asset and Bitcoin isn't. Because when turbulence happened, people sold Bitcoin and gold went up in price. So we can have our opinions, but at the end of the day, the market decides who's right. Over a long period of time, Bitcoiners are right, because look at price appreciation over the past 1 year, 5 years, 10 years. But over a short period of time, it still hasn't reached that safe haven asset. And that's most likely because trading volume isn't the same as gold. It's much harder to affect gold's price than it is with Bitcoin.
And you bring up a really good point. I think, last weekend is a super interesting example of, well, it's almost counterfactual to a lot of people's Bitcoin thesis, right? Like this should be a risk-off asset, yet in times of stress or calamity, correlations often go to one, and Bitcoin will sell off. Now, part of that could be it's the only thing you could trade on the weekend, right? So it is that source of liquidity, regardless of whether you view it as a risk-on or a risk-off asset. I'm curious what you think. What are some of the other reasons why it hasn't transcended into more of a risk-off asset yet? Is it really just because a lot of the current holders of it don't fully understand what they own, and they do still view it as a risk-on tech play in some sense? And how do we cross that chasm from it acting a bit more like gold has historically as a true, Larry Fink months ago called it a flight to quality.
Yeah.
And so I think he views it as somewhat of a risk-off asset, but it seems like the actual holders and traders of it may not be there yet.
So again, if you're taking very short time frames, it is much easier to affect Bitcoin price than it is to affect gold price, for example. And I recall in 2018, which was not too long ago, basically I saw someone sell a decent bunch of Ethereum, and it really affected the price. So again, how much money do I need to, slippage is a very important metric here. You probably need 1,000, 2,000 Bitcoins to really affect the price. Whereas with gold, you need to sell way more gold for that to, again, Bitcoin has a very unique market structure as well. So I'd say that the volatility is a feature and not a bug. The way that Bitcoin's priced, the way that Bitcoin's distributed, we will continue to see volatility in the short term. But again, I don't think we should be worrying about short-term price movements, because unless you're a professional day trader, but otherwise, for me, they're irrelevant.
Yeah, no, I totally agree. And I'm not going to hold you to a price prediction, but you did mention that you think over some future time horizon, it probably eats a lot of gold's market cap. I'm curious how you think about the potential for gold's market cap to increase, given everything that we know about the current fiat monetary system. Could you imagine or foresee gold's market cap doubling over the next decade? And then, if Bitcoin's matching gold, it's more like 1.2 million a coin versus the 600 you quoted.
So I don't know about gold doubling because of, I guess, how long it's been.
Yeah.
And its price. I guess Bitcoin, gold has also been volatile, but yeah, I mean, it's an interesting question, but I'm personally bullish on any hard assets that you need to put effort in order to get out. So anything that I can just write a piece of paper and issue more of, I think is going to get diluted over time, even if it's a share, even if it's fiat money, anything that doesn't require you effort to create.
Yeah. Awesome. Well, thank you. This has been an awesome convo, Talal. Really appreciate it. I think we'll wrap there and move to the next panel.